We're hitting brand new highs on the market, but there is a huge divergence under the surface we need to talk about. The S&P 500 keeps making new highs, yet consumer sentiment is near its lowest ever level on record. We've never seen sentiment this week at market highs. The divergence between the stock market and the consumer is at its widest gap in history. Now, that goes back to 2008. That goes back to all the way back to 1980, it looks like. So this is a big deal. I can't be the only one who's thinking that there's more going on under the surface than just the market's at new all-time highs. Everything is just amazing and wonderful. So just be ready, right? There's a lot of bearish news coming out right now while markets are pushing new all-time highs, which doesn't give me a lot of confidence. Doesn't give me a lot of confidence here. Next, a pullback in these stocks will have a disproportionate impact on the broader index. Now, remember, the S&P 500 is market cap weighted, meaning that the bigger names on here are going to have an outsized. Wait a minute, did this change a little bit? This did change. Apple moved. Last time I saw this, Apple was somewhere else. Anyway, the bigger names on here have a disproportionate impact compared to the smaller names on here. Like Nvidia is bigger than the entire industrial sector. Google is bigger than the entire energy sector. So if anything happens to these big names, the whole market's going to feel it. The entire market's going to feel it. So shares of chip makers are increasingly dominating the S&P 500 index, powering stocks to record highs, while that's stirring concerns over the rally's durability. This is something we've been talking about for the last couple of weeks, is that the rally is getting smaller and smaller and smaller. Breadth is getting weaker and weaker and weaker, yet the market keeps going up higher and higher because of how it's market cap weighted. Okay, so this gives me a lot of concern as well. Chip stocks now make up 18% of the S&P 500, more than a 2-decade high. Nvidia on its own is 8% of the S&P 500. But if you look at the number of points, like the dollar points in the S&P 500, it's basically these 1, 2, 3, 4, 5 stocks has more impact to the entire index than the other 272 points that have been generated by the other stocks. I think that's really, really interesting. Gives me a lot of hesitation here. And then lastly, macro charts put this out. It's just onwards, no big deal. No issues here, where US speculative option volume, mean bubble top in 2021, although let's be realistic here. What top are we looking at here? Like if the S&P 500 is the black line right there, it 1, 2, 3 times hit this line that they drew. And it only pulled back. How much later was that? Months, if not years after these points. And then the next time it hit this, they call it the trash top. I don't know if they're talking about this one or this one here. But this was in late 2025, before the Iran war sell-off here. And now it's gone above. I don't know. Charts like this, I think people want to build a narrative and say, well, look at this thing. And when this happens, it's going to cause the market to go down. I don't necessarily agree with that, but these are the kind of things you do need to keep in mind. And especially saying that, there's doom and gloom on the horizon. I don't know about that, because we still have a buy signal on the S&P. We're still pushing up higher and higher and higher, new all-time highs seemingly every single day. The market can't go down, it feels like. So that buy signal is still in place on the S&P. That buy signal is still in place on the NASDAQ. And let's go look at them today, this morning. We can see right here, yeah, we are up ever so slightly after this huge sell-off. Oh my gosh, on Friday, the market crashed to levels not seen since Wednesday. Huge, terrible sell. The market's in turmoil. Oh wait, it's the same price it was on Wednesday. And that's where we're at today. So just keep that in mind. There's a lot not going great under the surface, but price is where you're going to get paid. We look at the Qs right now. Remember, stonks, they only go up. The Qs still have all the bullish signals in place right now. And then let's go look at the VIX. The VIX is up ever so slightly today, just itty bitty tiny baby bit. Still not into the caution level. Anything over 20, I would start to consider caution, but we're at 1842 right now. So let's go next to RSP. So this is equal weighted S&P 500. And remember, if the S&P 500 is market cap weighted, and we're looking at equal weighting, it's still not pushing higher. And it hasn't pushed higher since February. In fact, if we go side by side with the RSP and the S&P 500, you can see this tale of two different stories right here. Equal weight is sideways to down since February. Market cap weighted, pushing higher and higher. And then let's go. I think I need to click that button. And then this one here, RSP divided by SPY. So equal weighted divided by market cap weighted was the absolute lowest on record ever. When I was measuring this, it was the lowest point ever in the history of time. So that divergence between equal weighting versus market cap weighting is getting bigger and bigger and bigger. However, starting to pull up a little bit today. But remember, while this is falling and the SPY rises, which is what we've been seeing, it's narrow leadership. You've got to be selective and have lots of caution, lots of caution. So let's go over to the put call ratio here. Put call ratio pulled back a little bit. We got out of the aggressive call buying and back up to bullish sentiment. So we'll watch that. Again, anytime you see aggressive call buying or even excessive call buying, which we got really close to, that could be the sign of a top. Wait. How does that make sense, Chris, right? Think about it, market investor psychology. If everybody's already greedy, if they've bought all the calls that they can buy, what's left to do? Turn fearful, to sell those calls, right? So we don't want to get to a point where we're over greedy in that case. Then let's go look at market breadth using the MMFI. So MMFI, that's a percent of stocks above their own 50-day moving average. And then MMTH, this is a percent of stocks above their own 200-day moving average. Both are continuing to trend down, right? In fact, both of them look like they're about to cross that 50 level. MMFI has crossed it right now, which means half of the market is actually trending down at this point. And we can go look at the market breadth dashboard over here, and we can see, yeah, that's exactly what we see. We see more sell signals coming through and less uptrends, more downtrends. That's where we're at today. Less uptrends, more downtrends, and more sell signals coming through, which is not a beautiful place to be. In fact, let's keep going. We can look at the new highs versus new lows. Okay, so the new highs is going down. New lows is going up. Also, not a beautiful sign. Not a beautiful sign at all. Because think of it this way, right? If you want that broad participation for the market to pull up, you want to have less new lows and more new highs. And we're just not seeing that. We're just not seeing it. Let's take a look at some of these big names that have been propping up the market, like Micron, still sitting on a buy signal since April 13th. It's been running like gangbusters. Let's go over to Micron real quick. I'm going to take a look at it. Let's go to, I'm already on Micron. Okay, cool. Since April 13th, Micron has gone up since our buy signal came through only 71%. Totally normal, 71% up moves on Micron with no sell signal in sight. We'll have to watch that. One way, if you want to get in front of the buy and sell signals, is watch the fear and greed curve. It continues to grow, but if this starts trending the opposite direction, just be careful, because this could signal the sell signal to come very soon after that. Then Microsoft. We just got news last week that Bill Ackman's Pershing Square has taken a stake in Microsoft, but it's still sitting on the sell signal, still getting more and more fearful, less and less greedy. And the tech sector on average is also getting more fearful, less greedy. And you can see that down here on breadth as well. More sell signals than buy signals. Let's go take a look at SMH. This is the semiconductor index. Has been running like gangbusters. Buy signal came through on April 9th, and it's been running like crazy, pushing 96 out of 100 on the greed scale. 96 out of 100. But the constituents who makes up the SMH, they're getting slightly less greedy. Slightly less greedy. So just be aware of that. Under the surface, these big names that have been moving like crazy are starting to weaken. They're starting to weaken. Let's go back over here real quick. We already did MMFI. We already did new highs and lows. Let's take a look at rates. So interest rates are really the big story lately, is that the 2-year has pushed up super, super high. There's no rate cuts on the table at this point, only rate increases basically. And then the 10-year is pushing up higher and higher. Now, this is going to put pressure on stocks because this is considered the risk-free rate. If this continues to go up, in fact, let's draw a couple lines on here. Why not? Draw a couple lines on here. Let's do this. Let's draw one from here to here just to establish the curve. And let's do the same on the 2-year. Let's draw from like here to here. Now, granted, I am not a big trend line guy whatsoever because they're super subjective, but it at least gives us the shape of the curve. At least gives us the shape of which direction it's going, so we can see that a little bit easier. Now, this is the 210 spread, and we don't have a crossover just yet. We're at 50 basis points right now. If this goes below 0, and we're watching this level right here, if it breaks under 46 basis points on that spread, I don't know where it could go. But if it breaks below zero, that basically means that a recession is on the horizon. You know what else is on the horizon? Lots of earnings coming up. Lots of earnings this week, including Nvidia. Now remember, Nvidia is 8% of the S&P 500. So whatever Nvidia does this week will have an outsized impact. If it moves up or if it moves down, consider the entire market to move along with that. So we're going to be watching that on Wednesday after the close. Next, let's go to the dollar. Pulling back ever so slightly this morning. But the dollar, anytime you see a stronger dollar, that's going to put pressure on commodities like gold, silver, and oil. And dude, silver has now entered order block city. Gold is in order block city and oil is in order block city, right? We're going to need an imbalance of buyers or sellers on all three of these commodities to push them one direction or another. And I don't know which direction that's going to be. And neither do you. Don't listen to any YouTube guru who claims that he knows which direction things are going. But gold is trending down, but it does have support. Silver, it has a ton of support right here. Hasn't quite entered the bearish trend just yet. And oil is actually trending upward, but it has a lot of overhead resistance. So let's go take a look at the risk on sectors to see if these are starting to rotate out. So XLK, these are going to be your technology stocks, like Nvidia, like Micron, like Microsoft. They're going to be in here. Seeing a little bit of weakness right now. Not a whole lot. It hasn't broken its trend by any means. However, communications, this is going to be things like Meta and Google. And Netflix has a ton of strength this morning. I don't know what's going on in that sector, but something big is happening. But it does have a ton of overhead resistance in the sector, so just be wary of that. Then we've got consumer discretionary, which is going to be your Amazons, your Teslas, your Fords. That's also finding support right at its 50-day. And then the financial sector had been drifting down, but seems to have found a good bit of support around the $51 mark and is starting to push up ever so higher. So other than this slight, tiny red candle right here, the risk on sectors actually look really sharp. Now let's go to the risk off sectors. We're going to have your energy right here. You're going to have utilities over here, and you're going to have staples down here. And then this is the SPY. Utilities have been just absolutely monkey hammered. There's nobody buying utilities lately. They've been buying some of the staples, hasn't really pushed up too much higher, and they've been buying some of the energy sector. And right now, energy sector is still sitting in this order block. It looks like the staples, if it closes above this point, will have broken through that overhead resistance, could be pushing up even higher. So I'm not really seeing the rotation just yet. We saw a little bit more rotation late last week, not so much today, but let's go to our market scorecard for the day. So our market scorecard still in this choppy pattern right here. And you can see that it's been, it highlights it yellow when it's in this choppy pattern. What's working right now, the trend of the market is absolutely pushing it up higher, right? Remember, a rising tide lifts all ships. A falling tide shows you swimming naked. And we've got the strongest thing out here is by far the SPY having that bullish trend. What's not looking so good is definitely the sectors overall. Only 4 of the 11 sectors are being bullish. What would it take to see an upgrade? If the sectors start to come around, right? If the sectors start to get more bullish, that would be an upgrade. What would cause a downgrade here if the SPY loses the bullish trend? Now, it's going to take a lot for the SPY to lose the bullish trend, but none of us know what's going to happen. Let's go look at the high coverage news today inside of OVTLYR. I saw a couple news stories I thought we were talking about. It was Berkshire Hathaway invests in Delta Airlines. Now, Delta Airlines is probably been getting beat up really bad. It's got that sell signal over here. We've got 3 of 9. So this is definitely a threat right now. But Berkshire Hathaway's bought some. Let's see if it's popped up today on that news. Let's go to DAL. I need to change view real quick. Let's see if Delta Airlines has popped up from that. Let's go to the year to date. That's not that's Micron. DAL. There we go. So it's sitting in order block city right here. This is an area that's going to be a lot of overhead resistance for Delta Airlines. It's pushed up a little bit this morning, but I don't know if it's really going to have enough buyers to support this. But remember, anytime Berkshire Hathaway says that they bought something, people are going to flood in just on that news. And then you've got, there was another one over here. Space stocks react in anticipation to the SpaceX IPO launch. So I looked at a few space stocks like Lunar. We made a couple of bucks on Lunar not too long ago. Still sitting on a buy signal as of May 11th, pushing up higher, getting greedy. Oh my gosh. From that buy signal, it moved from a 78 greed to a 91 greed. So this is going up hard and fast. The industrials on average are getting less greedy and less buy signal. So just be aware of that. This one's definitely bucking the trend. And then you've got Rocket Lab, similar situation. Buy signal came here on May 8th. is also pushing up super high and getting greedy as well. So listen, if this was useful to you, do me a favor and subscribe. We're going to be doing this every single day to make sure that you have the Outlier Outlook ready to go. And if you're ready to save time, make money, and start winning with less risk, click one of these two videos. We'll talk soon.